Alright, guys, what's good? Welcome back again to the channel. Alright, good to see you guys here. So, today we're going to be doing a quick recap of the trade that we took. Okay, so let's hop on the chart and see what we have. Okay, so I took a trade yesterday. Okay, so on the H4. Alright, so first of all, the two time frames that I use are the M15 and the H4. Okay, those are the only two time frames that I use. Okay, and then I use the H4 just to know my daily bias, just to know, okay, where is the market heading to today? Like, what are we supposed to look for, buys or sells? Like a general footprint. And then we have on the M15 is where we will be able to take our orders. You understand? So that's what I normally do. Okay, the H4 for knowing our bias, and then the M15 for taking trades. Okay, so yesterday, pretty basic day. Okay, this is synthetic 15. This is the this is the funded account. So I'm just trying to see. Okay, this was the closest thing I could find to step index. Okay, because I trade step index. So on the H for around this time, okay, I lost the trade on this retracement. Okay, and at the time I was like very sure it was going to be a retracement, but I was like, let's see how it goes. Okay, so the H4 is currently bearish. Okay, that's the bias. All right, our bias is bearish, so H4 is bearish. All right, cool, cool. Now we went over to the 15 minutes. All right, on the 15 minutes, now the trade I took around this axis, I took it around here. Okay, at this point, so the trade I took here was I was looking for buys, okay, and actually no, I was looking for a sell, okay, but by the time I sold here, the market wanted to retrace. Alright, so I was looking for a sell here, but the market wanted to retrace before going into my direction. Now, let's see what happened again for yesterday's trade that we took, which was a loss. Alright, we didn't make any money from it. Alright, so let's see what happened yesterday, and let's see how we can get better. So hit first bias was bearish, but I was looking at this at that time. This um rejection candle had formed. Okay, we had liquidity right here, equal liquidity, and normally equal liquidity will signal to me because it's a very strong point. Equal liquidity means that okay, market is going to push back down. So if it's equal highs, market is going to push back down. Equal lows, market is going to push back up. Okay, that's a really strong analysis, strong point for me. Okay, but I was looking at this. Damn, I was looking at this um rejection candle that just got formed. Okay, so there was a candle that got formed around this point. You can see it. So I was looking at it as a doji, normal doji indication that the market is supposed to reverse. Okay, so but obviously the equal highs has more prominence than the doji. Okay, so I was looking at the doji and I was like, alright, bet. So we are currently going to probably retrace, sweeping out this liquidity, sweeping out that liquidity, sweeping out this liquidity also. Okay, so that was what I was looking at, and obviously sweeping out this this load too. Sorry. Alright. So those that I saw that got swept, so I was like, okay, bet, well, I'm going to retrace. So this thing is okay. After that, so that's when I went down to the 15 minutes and started looking for what buys instead of looking for sales. Okay, and again, retracement. Alright, so I was looking for buys. So I saw, okay, first thing I saw was that, okay, we had, let me just clear all of this as we have already established our buyers, which was wrong. Okay, because the original bias is that the market is bearish. Plus, we saw equal highs got formed. Okay, which is a strong point for us to take trades to the downside. Okay, but I was looking at the doji, so that was 2v1 technically. Okay, so saw this guy. Okay, sweep of liquidity and then found what? Boom, break of structure around this point. Okay, so I saw the super liquidity, I saw the break of structure, and I'm like, oh, bet this goes in my bias. So let's look for, what do we call it now? Let's look for a third confidence, maybe just to certify on it. And then I saw this guy right here. So partial fair value gap. Okay, there's a small fair value gap, and then I was like, okay, also there's also order block. Okay, so this was literally like even four the whole four building blocks combined. So I saw market enter into here and then come out nicely, see filled this value gap nicely, and then came back out giving me a buy power and another bet. I entered off of this point, okay, and then market even entered into this point and started going up. So, but obviously this was a retracement, and then market started moving down back down to the downside. Okay, which was the original position that I wanted to go to before. Market ended up stopping me around this point because I gave a space for spread. Okay, as you can see, I gave space for spread. Okay, so I put it around this point and around this candle. That was when I got stopped out of the market. My take profits were set for this high. Let's go back to the H first. So I'll show you this high, this equal highs, and even okay. Let's see. I'm going to change this to like green. So I know what the name it again. So I set it for that high and I set it for this high also. Okay? And actually I was like, okay, market might not come all the way up there, and I was like, let me set it for this place, this level gap. Okay, because I know that obviously get filled. So if we take our risk to reward, obviously we don't want any one to one risk to reward because that is a stupid risk to reward to take. Alright, so I was looking for 1 to 2 and probably 1 to 3. So let's see what we have here. So we have from okay, I bought from here, okay, down all the way to the spread, which was at 150, okay, 152, 152. So we're looking for like 300, and so 152, 152, 300. So that was like my 1 to 2. Okay, so that was my 1 to 2. So I was like, but the market is going to come up here, but I forgot that obviously this thing was going to come down. So because of the so we had two things, the bias and equal highs against what? One thing, the doji. So I think that's how we're going to be trading. Hopefully we can do better next time. This was not a trade that was correct. I made a mistake. I admit my mistake. Okay. The market simply showed me what to do, and I do not interpret this as harmful information, but I interpret it from a neutral information from the market perspective. Okay, so that is how you should be looking at trading. Okay. Um Hopefully I'm going to also post like the seven rules and the seven principles and the 5 rules of trading. Okay, so and then maybe some errors also that will be our pinnacle for trading in this space, alright, in this environment. So if you still not the end of to this video, I really appreciate you. Thank you for tuning in. Stay tuned for the next one. This is Simply Forex. I'll see you guys in the next one. Peace out.